Hey everybody, it's TK coming at you live from the office. It's ReadySetFutures.com. Daily market wrap up, 13th September 2016. A couple of headlines. Big stop run on the ES at the open, taking it lower. VIX staying in concert, also breaking back higher. Crude oil, a terrific 70% retracement before selling off again into the API inventory report. And gold, trading in measured moves lower. But the big surprise on the day, Dr. Copper. We're looking at our daily chart of the ES. Again, it's our daily chart. This was today's trading action, our downward candle as we've been talking about here, Ready Set Futures. We like this market lower. We had a lower move today. We also talked about a number 2125 this morning being a critical area for short-term traders, and we saw that today. But let's get into the market action. Take a look a little bit deeper down to the 5-minute scale. Now, folks, my day trading days are over. Been there, done that. It's tough for anybody who's actively doing it and doing it well. Props to you guys. But so I'm a swing trader now, no doubt. I need a wider stop. I need a smaller size, and I need a longer time frame. But let's take a look at the action for today. This is the action in the overnight here. As you can see, we're kind of chopping around into the open. This is a nice box that we can set up. As you can see, coming in. At the European Open, we're chopping, break to the high side, come back down to the bottom of the range, check down here below this swing low for some additional stops, and then back higher. And we sell off outside of the range coming into the open. Now, if you're a range trader or if you trade the initial balance, this was a great setup for you. We run the stops here at this 1, 2, 3, 4 bars of congestion. Stops here take us higher. And as you can see, this swing high as we exited the box was ran by one tick. We have a high here of 213875. And we come out here at 2139. That's a one tick stop run before this monster just sells off. As we're moving lower, let me pull out a Fibonacci retracement for us so that we can see what kind of action we were in today. You can see a great 38% retracement. That's a popular retracement, folks, for consolidation periods. Came down, sold off as expected, and then ran back up to a 61.8% retracement before selling back down. And as you can see, we chopped around into the close, although trending slightly higher. If you're a range trader on the ES, today was a good day for you, at least once you got past the initial sell-off. But we do expect the ES to continue lower as volatility increases in this market. One thing to note, some may be asking why now? Federal Reserve has indicated they feel no rates are imminent, no rate hike is imminent in September, and that very well may be the case. Credibility of the Fed may be driving the uncertainty, as well as the Bank of Japan. They also have a meeting that will outline policy overviews. They're going to be meeting on the 20th and 21st of September. If you've been reading the articles that are out regarding their potential outcomes, their potential upcoming strategies, one of those may be a reverse Operation Twist. And if you folks remember what Operation Twist was, it was really QE4, if we want to call it that. The other piece that's driving, or at least what we see is driving this market lower, is a concept called value at risk. If you're aware what the concept value at risk, it essentially means how much of a position do you have on, what's the size of your position in order to extract a meaningful return nominally. So if you have one contract on at the ES, each tick is worth $12.50. If you have 100 contracts on in the ES, that means each tick is worth $1,250. The thing that we have seen, at least really since July, has been incredibly low volatility within the ES market, driving value at risk up. As traders need yield, their size increases inversely to volatility. And so as volatility increases, those positions must accordingly decrease. And so we see quite a lot of selling, especially when those increases of volatility happen abruptly. Selling happens fast. Markets move faster down than they move up. We know this. And that's one of the reasons for it. So that's our analysis of the ES market. We're going to turn over to gold next. So looking at our gold chart, here we see today's price action from a daily candle. It's a nice downward candle. It's an outside candle, which is phone call from the wife. Got to take that one. So daily chart of the gold, as you see here, price traded down to the lower boundary of the value area, the volume value area, I should say. And why don't we take a peek here inside the day's action? We're still on gold. We'll roll down to the 5-minute. Excuse me. We'll just change our scaling here to the instrument, and this is today's action. So yeah, we said in the beginning gold's trading measured move. Let's take a look. This is what we would really kind of consider the move. At least I would anyway. You guys are free to do whatever you like. Let's get a new one out here. I don't really like that. We're going to, pardon me, delete the shape. I'm going to edit some of this out. Come back. Boom. Here's the move. Right there. From the overnight. As you can see, we trade down here from the European session before we start to chop around. Go ahead and duplicate that. Just kind of drag it down. All right, there you go. And that's how we can tell we've got a measured move. Where we're trading in the range. We pop down. That rectangle is now the same width. Comes back up into the other trading range. Trades back, chops back and forth. This is a terrific looking chop fest, folks. What's interesting, though, is at the break, we see a significant move down in price at 10 o'clock in the morning. Back up to check that second measured move before it sells off again. If your bias is short, which ours is, then this was a great opportunity right here as we were checking the bottom of that range. You had another couple nice opportunities if you were trading in the pre-market, even in the aftermarket if you were trading as well, provided you maintained a short bias. These were good opportunities, folks. Here, and then again here before we see the sell-off. Moving over to everybody's favorite instrument, WTI. No, it's not a boy band rap group. It's West Texas Intermediate, otherwise known as the CL, black gold, you name it, you call it. It is a popular instrument to trade. Some call it the Widowmaker, but I tend to leave that moniker for natural gas. In any event, as we talk in the pre-market, coming down here to the value area low, back up to the point of control and selling off again, and we can see crude is beginning to accelerate. This was today's action here, highlighted in gray. As we've been doing with our other markets, why don't we dive in to a closer look of the action today. Again, as we're moving lower, we're going to pick up our Fibonacci retracement tool from here. Oops, excuse me. From here to here. And that's where we have our 70% move. So, you know, granted, it is in the overnight. We had a nice move just to run these stops as part of, you know, as part of what Crude does. This is, I don't know if you guys, if anybody of you guys trade Crude, man, stop runs, name of the game. So coming around here, running stops to take it higher, and then back up to the 70% retracement right as the market opens, or maybe 5 minutes after it opens, and then we sell off. If we want to look and see what kind of trading action we had after that, I'm going to take it right to here. Pardon me. Move it down one. And then using this. And again, a great setup for distribution. We make our move down, back up to 38% retracement. Again, down, stop run, 44.78, 44.77 by one tick before we come back up, 61.8%. You know, some would call this a choppy day. I call this distribution. We here at ReadySetFutures and ReadySetFutures.com love a 70% retracement area. That's one of our favorites. And let me make this accurate. Just, you know, yeah, 70% is not a Fibonacci, not in the Fibonacci sequence. However, it can be very prescient as it was today. And you see what we end up tending to have happen is we go in stages. We go from a 38% retracement back down, 50 or even a 60%, 61.8% retracement, back down. Traders then like to use this swing as a marker, and I can tell you from what my experience has been, if we see a large amount of selling once price reaches this swing area, then we're not going to hold this base of support. If we do end up finding a lot of acceptance above this, then price tends to move higher. In today's instance, as the market's closing, this was the API inventory report. Again, this is not the EIA. This is an independent agency that also publishes a inventory report. They publish theirs today. The government, the EIA, publishes theirs tomorrow. Today, I believe the API was expecting a build of 4 million barrels, and I believe it rang in at 1.5. So fairly significantly under what the consensus was. However, looking at this, you can see as price traded higher, it also sold off considerably, even in the same bar. And we sold off into the close. So take that for what it is, folks. We shall see how this plays tomorrow. But kind of an interesting sequence of events here throughout the crude oil trading day. Last but not least, Dr. Copper. I don't know why I call him Dr. Copper. Certainly no doctor of mine. But interesting that, you know, price continues to gain acceptance higher above this range. This was today's price action. Again, on a daily chart, we'll dive in and look down further. Again, this is today's price action. You can see within the past 1, 2, 3, 4, today being the 5th day, price continues to bounce and move higher after attempting the value area and low boundary and trading above the point of control. As we gain more acceptance, the case for further price appreciation increases. However, let me show you something at the smaller time frame, let me zoom out here. This was essentially today's action. Here's the overnight. Boom, 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 boom. At the open, we dumped. Just absolutely dumped in terms of price. I would say this is probably, for me anyway, the biggest surprise of the day. Totally unexpected. Again, for me, maybe you guys saw it coming, but we talked earlier today, at least in the pre-market warm-up, that our general bias, at least my general bias in copper is to the downside. And as we just spoke even a few minutes ago, looking at that daily chart, we see price starting to gain more and more acceptance. Either somebody hit the market because they were afraid, or we may see a move lower. But this was a significant sell-off in copper before we chopped around and moved a bit higher into the close. Who knows what tomorrow's going to bring in this market? Well, in fact, we don't know what tomorrow's going to bring in any market. We're not prognosticators. We can't tell the future. We just can correlate what we've seen in the past to what we're seeing now and make a reasonable estimation. However, this one in particular befuddles me. Maybe you guys who have traded copper frequently in the past understand this a bit better, but for me, this was certainly the surprise of the day. So copper lower into the close. However, we'll see tomorrow what the day brings. And with that, our market wrap-up is complete. Thanks for listening. Please take the time to click on the link to subscribe. Hit me with a thumbs up. Really appreciate it. And we will talk to you guys in la mañana for another great pre-market overview. See you guys then.